Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 186. Now, in today's episode, what we're going to do is take a look at some of the news-driven headlines here in the marketplace, and then, of course, towards the end, I'll share with you some insights on some of the stock charts, at least the more popular ones. Now, if you want to get some more details about other stocks, maybe a more quantity of stocks, then take a look at the critical chart services that I have on the tradersfly.com website. That being said, let's get right into it. And as we take a look here at overall a little bit of the issue that's been going on here on the Italian turmoil, this really is what shook up the markets and kind of moved it to the downside there on Tuesday. So as we look here, Tuesday, 5/29/2018, we were down about 40 points or so on the S&P. Now, we did manage to rally back the next day, so the market started to rebound because the market has a short-term memory. So as you whipsaw to the downside, you get massive spikes to the upside, so you get that rebound. But then again, today, as you take a look at it, we have this pullback. So stocks now are mixed as Trump sets midnight deadline on tariffs. So again, he wants to keep pushing these tariffs, these kinds of taxes on well, basically they're tariffs, taxes upon these import-export goods from other countries, from Europe, Mexico, and Canada, especially for the steel and aluminum. And, he's also trying to do things regarding China. But now what's also happening is, if you've read some of the news headlines, is China's actually trying to collaborate now with other countries to kind of bypass the U.S. So in the end, the U.S. Residents are going to, the prices will keep inflating, really, if this ends up happening. Already, if you're not seeing it, between prices at the pumps, between prices like on Amazon Prime membership, Netflix raising its prices over the last couple months, or 6 months or so. You have a lot of companies that just overall raising their rates. McDonald's, you have Chipotle that raised rates. Now, they have hit their earnings, and it's been a positive for the stock. But I'm saying the money that you spend out of your pocket is much more. So you have less money in your pocket to invest, less money to buy other goods. You're paying more for shipping costs now as well. I was just at the post office a day or two ago, and definitely prices have increased quite a bit. I remember the flat rate box for the medium used to be about $10. Now it's up to like $15, $16. So all these things start to escalate. It's like a good 20%, 30% jump in all these prices. Amazon Prime, 20%. So you're definitely inflating costs throughout. And as these tariffs come in, who's going to burden the costs? Well, they'll just raise their rates on the products and the goods, and the U.S. customer will end up paying more. That's usually just the way it works out. And in the end, the regular person is left with less. So overall, we're a global economy. And as you take a look here with the Canadian economic growth, it also slowed down. Now, the U.S. typically right now is hitting about 2.5%, 3% economic growth as far as their calculations are concerned. But as you look at Canadian growth here, even though it's not a huge populated area compared to other countries like the United States, it did slow down. Now, why is this important? Well, if other places are slowing down, Canada just doesn't deal with Canada. Canadians are not just Canada and that's how they deal with business. No. Business is conducted across seas, across borders. So if Canadian economy is slowing down, what do you think's happening to the other economies? It's not always the case. It's not always the case. But if they're shipping less, well, that means somebody's receiving less. If they're buying less, that means someone is selling less, a country here or there. That doesn't mean, other countries aren't benefiting because maybe they're buying it from other countries and not specifically your country, or like, let's say the United States, it could be with other countries. But in general, if you're a global economy and one country starts slowing down, then the countries those countries deal business with and that are intermixed and tangled, they'll also somewhat slow down. Not in a huge way, but slightly. And as all of these cylinders start slowing down, your country as well will slow down, just like I'm talking about the US here. So we could also be slowing down because you have drama here in Italy, you have issues here in Canada, the US with their trade problems with China and North Korea drama, interest rates also rising. So all these create a little bit of turbulence and problem. So as you look at individual stocks, you got GM that spiked pretty good here with some news comparing it to, 10 years ago where they really struggled to even be on the stock market. And Microsoft passing Google here in market value. So as you take a look here, GM, look at that spike, about 11%. Normally I don't chase stocks that are up this high in a single day. But definitely you can see it's making a move. It's not one that I would trade or invest. I mean, cars, manufacturers, very tough competitive market. But it's definitely popping quite a bit. If you take a look at Microsoft, which is quite amazing for a company that's been around since the 80s, had a nice big spike during that dot-com boom, pulled back in 2009, but really, it's keeping up with the times. And a lot of times it's difficult for these very big companies to keep up with the times, but it's really doing quite amazing between their Xbox services, just a lot of things that they're producing and a lot of the changes that they're doing. It's just doing well. They're making smart decisions and the company's able to adapt and grow with the industry, and that's actually fantastic. Now, as we look at other individual companies like Amazon, you can see some of these companies, what I'll mention is they're hitting kind of their peaks. So you could see we're coming right into these peak areas. And as you start coming into these peak areas, this could be a little bit of an area of concern or trouble. So taking a look at Apple, also 190, a little bit of resistance right there. You can see we're in that digestion phase. It's simply because we've bounced so far from those April kind of lows, or end of April, early May, the swing point right here in many of those stocks. And when you have such a high bounce, you need time to digest the move. It's like going to eat at a buffet, you eat a ton of food, you need some time to just lay down and relax. So the same thing here, you need time to digest. Here's Netflix, we had another little pop, a little bit of rejection here at 355, but overall this stock continues to kind of move in that upward trend line and channel. So here I'll show you a couple other stocks. Here is Square, also right at that peak, right at those resistance support levels. So the question is do you think it's going to break out higher, or do you think it's going to break down lower? I mean, we could have just isolated sideways as well, but when you look at the lows here, we are kind of stretched, and that's what I'm talking about, is that angle of elevation, a bit stretched on that. So a little pullback wouldn't hurt. Here's kind of PayPal holdings as well. So you can see coming kind of right into resistance. You have another one a little bit of up there at the top as well, at resistance. And those are some of the main ones. Let's see, P&G also is pulling back a bit here. Here's $73. It had a little couple of day bounce, but you can see we're struggling. Look at the volume here with the bearish volume problem. So again, 70 on this one is key. If we break 70, I mean, this one could see some trouble even further down below into the 60s if we break down below that. So these are some of the couple of the main stocks, and you could take a look at other companies like Visa even. A lot of stocks and companies are just kind of hitting these levels of resistance where they're stalling out. And as you look at S&P, again, it pops, pulls back, pops, then pulls back. Anytime you have a pop, you basically look at these swing points since recently, all these have, sold off. And you can see we're kind of rolling anytime we're rolling. So this kind of creates a little bit of an area of a concern. If you look at this descending trend line right here, okay, we had a little breakout right there, but even then that falls with some rejection. As you take it out, you could see there's some swing points here. Here's your swing points. Here's kind of a little bit of a few little rejection areas. So anyways, be very careful because the market seems to be weakening. Even here, look at Shopify is right there, right at that resistance level, a little bit higher. It made a few highs in the past, a little above that, but overall, you're right at that brink where, it's got to break out or it's going to probably break down a bit. Some of these things can move sideways, but you can see many of these companies are right at those peaks. And let's see, looking at the live price right now, S&P is down about 17, 18 points. So what do I think may happen? Well, you might just consolidate and move sideways here between that 2,600 and 2,800 for a little bit of time. That's quite possible, especially as you take a look here at the weekly. This could be a 1-year problem like this going sideways. It could be a 5-year thing. It could be a 10-year thing. It could be a 20-year thing like from the 60s to the 80s. So, meaning 1960 and 1980. So keep in mind that, let things digest, evolve, but you could see anytime we get these pops, we're getting more weakness that comes in. And the trickle from the tax cuts really went all to stockholder buyback. So if you don't have a lot of investments, you probably didn't get a lot of benefits from that. So anyways, those are kind of the main headlines, the main news that's coming out. If you want to subscribe to me on the YouTube channel, click this icon right here. But if you want to get notified on my newsletter list to any new products, new books, new courses, or even sometimes discounts that are available on some of the in-depth material that I teach, then get on the newsletter list by clicking the button right here. When you get there, enter your name, email address, and you'll be sent out those newsletters every single Thursday. So I'll see you next time. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.